I got a message last month from a woman, we'll call her Carol. Carol is 67 years old, retired teacher, fixed income. She told me her homeowner's insurance just jumped $380 a year. And then her insurance carrier dropped her entirely. The replacement policy cost $420 more per year than what she had been paying. Then she opened her mortgage statement. Her escrow had gone up. Property taxes. And she hadn't looked hard at that line in years. In 90 days, Carol's housing costs had risen by hundreds of dollars every single month. She hadn't moved. She hadn't renovated. She hadn't done anything differently. The costs just found her. If you're retired or close to it, I need you to hear this. Housing costs are no longer stable. Rents, insurance, property taxes, all three are moving against you at the same time, and almost nobody is talking about it. Today, we're going to fix that. Let me show you exactly what we're dealing with. Three costs, all rising, all hitting fixed income retirees at the same time. First, rent. Since 2021, rents across the Sun Belt, those retirement states, Florida, Arizona, Texas, they've climbed between 18 and 28% cumulatively. Florida led the country with a 28% jump in a single year. Today's national rent levels are still 18% higher than they were back at the start of 2021. Even where rents have softened slightly, they are not going back. Second, homeowners insurance. Nationally, the insurance premiums increased 10 to 11% in 2024 alone. That is the national average. In the states where most retirees live or are moving to, it's worse. Florida, 9.5% last year, 47.5% since 2019. Georgia, 10.5% last year. Colorado, nearly 11%. And in Florida, the average annual homeowners insurance bill is now over $7,000 every year. That's 181% above the national average. And that's before you factor in what happens when your carrier, your insurance carrier, drops you entirely like Carol. And you have to start over with a new policy at new rates. Third, property taxes. This is the one nobody sees coming. According to CoreLogic, property tax bills climbed an average of 27% nationally between 2019 and 2024. 27% in 5 years. If your property tax bill was $3,000 in 2019, it's now closer to $3,800. And in Florida, property taxes have risen 9.5% per year since 2019, every single year. It shows up buried in an escrow adjustment. Your payment goes up, you try and adjust and move on. The money leaves quietly. Now, let me put all three of those together in your money. If your total housing costs, rent or mortgage, insurance, property taxes, go up just $300 a month, here is what that costs you over 10 years. That's $36,000 out of a fixed income budget. That's before inflation even compounds it even farther. This is not an anxiety story though. This is a math problem. And math problems have math solutions. Let me show you three of them. When my company stock went to zero, I didn't need a motivational speech. I needed a plan. The same is true here. The housing cost crisis is real. But the people who get through it are not the ones with the most money. They are the ones who restructure fastest. Today I'm going to walk you through what I call the 3-move framework. Move 1, the housing reality audit. You've got to know your actual number. Move 2, the cost shift strategy. Move the variable costs. Protect the fixed ones. Move 3, the income stack response. Add $300 to $500 a month to offset the increase. Okay, let's start at the beginning. Here's the problem I see over and over again. People tell me what their rent or mortgage payment is. That is not their housing number. Your real housing number is this: rent or mortgage, plus insurance, plus property taxes, plus utilities, plus the HOA if you have one. And here's why property taxes matter more than people realize. The average American's property tax bill has gone up 27% since 2019. That increase is often buried inside an escrow adjustment. Your mortgage payment goes up. You don't even know exactly why. You just adjust and move on. That's money leaving your budget somewhat quietly every month. When I walk people through this full calculation, they are almost always undercounting by $200 to $400 a month. That gap is dangerous on a fixed income. So look, do me a favor. I want you to pause the video and do this right now. Write down every single housing related payment that you made last month. Every single one. Add them up. That is your real housing number. Once you know the real number, you can start moving it. That brings us to move 2. The cost shift strategy is not about cutting your quality of life. It's about moving costs that are eating your budget without giving you anything back. Let me give you 3 specific moves. Move 1, it's called geographic arbitrage. Look, this one is not for everyone. Totally get that, right? I have grandchildren. But it's worth knowing the number. In cities like Tucson, Arizona, Knoxville, Tennessee, Greenville, South Carolina, San Antonio, Texas, retirees in those markets are paying anywhere from 15 to nearly 40% less for comparable housing than the national average. Tucson is the most dramatic example. The average rent in Tucson right now is just over $1,000 a month. The national average is $1,638. That's a 39% difference every month. You don't have to move, but knowing what a move would save you, it may give you some negotiating power with yourself and sometimes with your landlord. Move 2, house hacking in retirement. Let me tell you about a comment that I received. A widow wrote in. She was facing real pressure on her retirement budget. Her home was paid for, but it was too big for her, and her costs kept climbing up. She made a decision. She now rents rooms to 3 other women. She's not just ahead of her retirement budget, she also solved her isolation problem at the same time. Meal planning and preparation has become an enjoyable group experience. That's not a compromise. That's a redesign. And it's generating $400 to $800 a month in income she didn't have before. So think about it. ADU rentals, room rentals, seasonal arrangements. These are real options that real people are using right now. Move 3, insurance restructuring. Most people, you set your insurance up once and you forget it. That's expensive. And as Carol found out at the beginning of this video, carriers are dropping policies in high-risk markets with very little warning. Here are 3 things you can do this week. First, raise your deductible strategically. See if it makes sense on the savings. If you have an emergency fund that can cover, call it $1,500 to $2,000, raising your deductible to that level can cut your annual premium by $200 to $400, depending upon the policy, where you're at, and the carrier. Speaking of carriers, shop carriers proactively before they drop you, not after. Get 3 quotes this year. Don't wait for your renewal notice. Third, make sure you bundle your insurance correctly. Home and auto with the same insurance carrier almost always produces a discount. But the bundle discount, it varies widely. Check the math. These 3 moves alone can recover $200 to $400 a year. And the proactive shopping, it protects you from that situation, again, that Carol found herself in. Now, let's talk about the other side of this math. If your housing costs go up $300 a month, you need $300 a month more. Simple math. That's not impossible. That's a Tuesday morning on rover.com, or 1 tutoring client a week, or for some, a single consulting call. 214,000 of you watched the original $2,500 retirement video. The number one question I got after that video was, what if my costs go up? This is the answer. The housing crisis does not kill the $2,500 retirement. It forces the upgrade to the $2,500 plus retirement. You don't just cut, you stack income. A small income, $300, $400, $500 a month, does more than cover the increase. It changes how you show up. It changes your relationship with anxiety. It changes what the rest of retirement looks like. Here's what I have learned watching people navigate this. The ones who restructure, they do the audit, they make the moves, they build even a small income stack. They show up differently for the people they love. They are not anxious at Thanksgiving. They're present. The widow who rented those rooms, she didn't just solve a budget problem. She built a life that she actually wants to live. That is what financial stability makes possible. Not a number on a screen, a life that you can be present for. That is worth the math. That is worth the work, and you're capable of it. I'll see you in the next video.